The third interview is with Roger Jenkins, in some ways a legendary figure in the City of London. I hope you don't mind being called that. One of the people, for example, one of the architects of that great money-making machine, Barclays Capital, now perhaps not so dearly loved as once it was, but I'm sure it will bounce back from that. Been very active in Barclays private equity, for example, part of your history. Now, just picking up from a couple of the things that we've just heard about world growth being focused in emerging markets, about investing in emerging markets being the characteristic risk-off trade. Roger now works for BTG Pactual. Now, I'm not sure how many people in this room have heard of BTG Pactual, but Pactual was a small investment bank and asset management business set up in Rio in 1995, Rio de Janeiro, that is, Brazil. It recently IPO'd at $14.5 billion 6 months ago. Roger is a member of the executive board of that institution, which is now is making steps towards becoming a regional merchant bank, regional investment bank and securities house throughout Latin America, having bought businesses in other growth markets such as Chile and indeed more recently Colombia. So we're going to talk just for a moment or two about Brazil. First of all, just a very open question. Why did you go to work for a Brazilian bank?
Good question. I left Barclays and was running some money from this part of the world, and decided that if you had an opportunity to go anywhere, you'd go to China, India, and Brazil. That was where the growth was. You wouldn't be in Europe. You wouldn't be in America. And I found Brazil much more affable than China and India. Ended up doing some deals. And Andre Estevez, who owns BTG principally, said, don't do them on your own, come and work for us. So I, after a bit of toing and froing, joined him about 15 months ago.
Brazil obviously is the bee of brick, and that's a bit of a cliche, but let's talk a little bit about Brazil. Brazil has seen ushered in a new era of political stability with the election of Lula 10 years ago. The first time there'd been a change of government without an attendant financial crisis, and that stability with the odd bump in the road has basically continued since then. You've had a country which has grown very nicely, growth somewhat off this year, but still reasonably respectable rates. You've got single-digit interest rates now, because the Brazilian central bank has been used to interest rates way north of what anybody else would accept. Brazil has a revaluing currency, the real. Big export bid from China in commodities, both in terms of agriculture and minerals, but also, of course, is a high-tech economy, has an indigenous aircraft manufacturing industry. So the strengths of Brazil from the point of view of launching a merchant banking platform, tell us what they are, tell us where the synergies are with some of the bid you see from this region, what are the linkages you see here, what practical steps can people here take advantage of to buy into some of that Brazil story?
Sure. I think it's very interesting. Brazil's a population of 200 million people. We often refer to it in BTG as a partnership as America in the 60s. You've got a burgeoning middle class. A lot of our private equity investments, we raised a fund from investors in this region of about $1.6 billion 18 months ago. And the thesis was to take advantage of the consumer growth. So we've done discount stores, we've done car parking, we've done hospitals, all the things that you would expect and you've seen in both the American and the European private equity business industries grow. So we've invested heavily in all of those. We're the largest real estate company in Brazil, the largest hospital owner, largest car park owner. And I think you see the middle class growing at a significant rate, and the savings rate is continuing. So I think it's a tremendously exciting opportunity, but it is a very self-contained country in a funny way. There's some technology, as you know, around what Petrobras is doing in the pre-salt, but I think overall it is quite a self-contained story with tremendous opportunities as an indigenous economy.
It's interesting that you highlight that self-containment of Brazil, which is undeniable. The international component of the economy, of course, has grown, but is still very small by most countries' standards. Nevertheless, people do worry about Brazil's exposure to China, and people don't seem to be able to make up their mind whether China is slowing or getting faster. You know, it changes day by day, probably because the figures are unreliable. But is that exposure to China and the Chinese commodity bid a major issue for you in terms of your strategic thinking about Brazil?
Not as a bank. As a bank, there is tremendous growth indigenous to Brazil. I think obviously companies like Vale and others where their iron ore cycle is dependent on, you know, iron ore prices in China and steel production, where you've seen iron ore prices drop from about $148 a ton to more like 92 today. So that's affected some of the big iron ore producers. We ourselves think the mining cycle is tremendously exciting at the moment. We've done two things. We've launched a mining company with Roger Agnelli, the ex-CEO of Vale, where we've backed that, and we've also just recently launched a mining fund with our friends here in Qatar and some other one or two other investors to look at Africa and Latin America. Again, looking at the mining cycle coming back and commodity cycle coming back over the next 4 or 5 years.
Just a quick word about what in some circles is known as ROLA, rest of Latin America, tends to be a sort of Brazilian-focused view of the world that generates that acronym. How important is the rest of Latin America to the firm's strategy, and are there things there you should be talking to people here about?
Well, I think that, absolutely. I think we took the view that Brazil as a story is not big enough for what we want to do. Our aspirations are Chile, Peru, maybe Venezuela when it settles, certainly Mexico, Colombia. As you say, we bought Selfin in Chile, and we've bought Bolocenta in Colombia. So we want to be the Latin American merchant investment bank of choice.
Good. Let's pull back from our beloved Latin America.
Yes.
Looking somewhat more at the world at large, at the re-engineering of the global financial industry. Let me give you the most open-ended question I can think of. What does a bank do?
Well, actually, let me give you an open-ended reply. What is a bank? Is a bank a deposit-taking institution that then circulates funds and intermediates to small businesses and the consumer, which is certainly a UK model and a lot of politics around that is what banks should do? Is bank a provider of funding for infrastructure, which means that you have to have funding of 30 years and more to be able to fund the proper infrastructure projects through their growth? Is it a risk manager, in which case you've got to have a risk-taking capability in derivatives? Where does proprietary trading sit in a bank? It's a very, very interesting question, which I think the regulators are struggling with.
And it seems to me, certainly from a UK perspective, I'm not sure, I wouldn't speak for other countries, but that the media and politicians are not even aware that that is a question. They have a fundamental misunderstanding of the subtlety and complexity of what they call banks.
Yes, I think the regulation, the regulatory challenge is complicated. You're constantly playing catch up. Since 93, what was 93 was a Mexican crisis, 98 was an Asian crisis with a shadow banking crisis in LTCM.
We had a Russian crisis.
We had a Russian crisis around there. Yeah. We've had the subprime crisis or whatever that was, which has hit the world heavily for the last 4 or 5 years. The regulators are constantly playing catch up, and I don't think they've answered the fundamental question of what is a bank, because the Financial Stability and Oversight Committee, which Geithner chairs in America, talks about they want to look at the mix, the content, and the scope of a bank. And the shadow banking community is $67 trillion of balance sheet today, unregulated. So there is. I think it is very, very difficult to get your hands around exactly what the regulatory challenge and the regulatory response is to what has gone on. And also at a time, if I just finalize one other point, is I think the previous interview was an interesting discussion, which is today we want stability and we want confidence in the banking system. But every headline creates a lack of confidence and a lack of stability in the banks, because you see stress tests, if I'm a depositor, I'm worried, does Bank of America pass their stress test, yes or no? Does Bank of National Paris pass their stress test? So it's almost schizophrenic. You would love stability, and if you want stability, do you need to continue to criticize the banks?
So let's look at some of the measures that have been put in place. Look at Dodd-Frank, look at the Volcker rule. I mean, give us some sort of critique of those individual pieces of legislation and tell us how you see the so-called Eurozone-wide, what I talked to James Sassoon about, how you see that authority playing, if indeed it ever truly comes into existence.
I think, gosh, that's a huge question. I mean, Dodd-Frank is trying to get to, I think Dodd-Frank's trying to get to stability issues. I think Dodd-Frank, I think the sections 165 where they're focusing on, particularly on banks with $50 billion of more of assets. And that then brings you back to the question of, is it too big to fail? I think that's the wrong question. I think the question in banking today, is it too big to manage? And when you have a $2 trillion balance sheet, what's evidenced through this crisis is that all the regulatory aspects of moving to risk assets as a measure of risk in the balance sheets is such that very few people understand what are in the bank's balance sheets. Even the management find it very difficult to understand. What's refreshing about where I am at BTG is it's owned 80% by the partners, and we spend every Monday going through almost every position. I've never, in my experience, that was not something that happens in the big universal banks. So I think in answer to your question is, Dodd-Frank, I think, is trying to, the ambition is correct. I think the execution is extremely difficult. It's interesting here in Qatar that they've moved, banking and insurance into one regulator. And I think in Europe, having one regulator may make life easier. I think it is a pipe dream because of the political aspects, but I think it makes for a great
pipe dream that will never come to reality?
Maybe not in my lifetime.
Okay, well, we wish you a very long and happy, not to say prosperous life. It's almost axiomatic, isn't it, that regulators are going to be looking in the wrong place when the crisis blows up somewhere else. We spent a lot of the last decade worrying about unregulated hedge funds and all the wicked things that they were getting up to. And then, of course, it was one of the world's most highly regulated industries, banking, and let us not forget that the crisis began in retail banking, not in investment banking, that blew the whole world up.
Yes. Well, and retail versus, in a way, it was an encouragement. I think it was an encouragement for home ownership in America. And that was a political, that was a Clinton, Bush, that was a huge push, which was ownership. Then, if ownership was going to be done, Freddie and Fannie Mae that were encouraged to ease up on their underwriting criteria. Investment banks started to own mortgage originators, mortgage servicers, and so the story unfolds in 2006 and 2007, and then also with teaser rates in their mortgage product, where I could pay my bills when it was 2%, I couldn't pay my bills when it was 5% in terms of my mortgage payments. That's the thumbnail sketch of where we got to.
So to some extent, you're kind of lining up with the Gordon Brown rhetoric of about 2009 when he was saying it's an American crisis, not ours. It was all Bill Clinton's fault?
I don't think it was all Bill Clinton's fault. I think it was...
Let's blame him. Why not? He isn't here. So.
Well, he isn't here, but he's a good guy. I think everyone's complicit. I think it was a classic boom and bust. There will be the next one in the next 5 years. It'll be something else. It's a history of the financial services industry and the economies that we live in. It's like the weather.
Like the weather. You mentioned the mortgage criterion, Fannie and Freddie, and that great sort of socialized mortgage machine that the United States had and has. It's often said that every financial crisis in the end is a property crisis, a real estate crisis. Is there another one brewing today in Western Europe? Because that's the dog that hasn't yet barked in the Netherlands, in Denmark, in Sweden, in Germany, in France. Property has gone up and up and up in value. Households are become more indebted in order to have somewhere to live. That one hasn't yet gone off, has it? Do you see that as being the potential?
I don't know. I'm not close enough to it to really have a feel for what banks loaned, what the books look like in the European banks and in the housing. you could surmise, but I'm not close enough to it.
Okay, let's look at this region then. Let's look at Qatar and the wider GCC. Is the banking sector here being well run, being well regulated? Are they sufficiently conservative? Are they sufficiently adventurous?
I think so. I mean, I'm not an expert. I'm not an expert on the Middle Eastern banking scene in terms of what their books look like and what they're doing. I mean, if you look at the Middle East versus the Chinese, I think that would be an interesting comparison. The Chinese non-performing loan situation is obviously well documented. I think here the GCC is growing sufficiently robustly, I think, in terms of world terms, that it seems that the sponsor, for example, to QNB is a very well capitalized and very well run bank. So I think I certainly, as a practitioner, would be, if I had a credit hat on, would be less worried about this part of the world than many others.
Okay, and one final question. If you were to give us, given your long history in the city, in investment banking, in broking, in asset management, in private equity investment, and where you are now, if you were to give us one trade for the next year, if we meet one year from today, what would you tell this audience to be putting their money on?
Well,
other than BTG stock, of course.
I would. That's a great question. Of course, I think you will see a resurgence in commodity prices,
which is good for Brazil.
Which is great for Brazil.
Good. We began and ended with Brazil, except I do want to find out what you meant by more affable. But maybe we'll leave that until a little later. Ladies and gentlemen, thank you very much. Please join me in thanking Roger Jenkins. Thanks.